a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about ETFs that focus on companies with high free cash flow. So, in this environment of high inflation, sticky inflation, record high interest rates, and a potential economic slowdown, investors believe that cash is king. So, ETFs that focus on cash rich companies have seen a lot of interest from investors this year. And according to legendary investor Warren Buffett, free cash flow is an important is it's the most important valuation metric according to him, and he loves companies that generate more cash than they need for their operations or for their businesses. And while accounting profits are subject to various non cash items and accounting adjustments, free cash flow, which measures a company's ability to generate cash, is a better indication of financial health, according to many analysts and experts. And this free cash flow can be used to increase shareholder yield via dividends or share buybacks, pay down debt and reduce leverage, and also to expand operations. So let's take a look at some formula formulae how it is calculated. So, free cash flow yield calculation on this slide. Free cash flow is basically cash flow from operations after the company has paid expenses, interests, and taxes, and other long term investments. And then enterprise value is calculated as market capitalization, and then adding back the debt outstanding and subtracting cash and cash equivalents. And then free cash flow yield is calculated as free cash flow divided by enterprise value. Now let's take a look at three ETFs that focus on companies with high free cash flow yield that have been beating the S&P 500 index lately. So the first one and the oldest one in this space is by Pacer, has been very popular with investors last year and this year. And this focuses on companies with strong cash flows and healthy balance sheets, has an expense ratio of 49 basis points, and has close to 14.5 billion in assets. And let's go to the quote page on Zacks.com to learn more about the CTF, so you can read our research articles, report. And I did a podcast with Pacer last year. You can listen to that podcast to learn more about the CTF. And then using this link, you can go to the Pacer webpage for this ETF and see what it does. So this is what how it selects companies. It starts with Russell 1000 companies, and then selects 100 companies with highest trailing 12-month free cash flow. Then the holdings are weighted by free cash flow, and they are capped at 2% at the time of rebalance. That is to have a better, more diversified portfolio. So, what do you arrive at this after all these weightings? You get a portfolio, and Chevron, Marathon, Valero, Philips. These are the top holdings in the portfolio currently. In fact, the CTF has a lot of exposure to energy, so about 38% exposure to energy. Then healthcare is about 15% of the portfolio. Now, the second ETF that I'm highlighting, this launch this year, a couple months back. This also focuses on high quality, large cap stocks with favorable growth prospects, trading at a discount. And this is also free cash flow weighted. In fact, all these ETFs that we are discussing today are free cash flow weighted. This one much smaller than the earlier one, 83, but still very impressive. I said gathering, considering it's quite new. has an expense ratio of 39 basis points currently and 83 million in assets. And again, let's go to the quote page on Zacks.com, and using the link you can go to Victory Capital, Victory Shares Capital. So Victory Shares uses an innovative approach. It applies an innovative approach to calculating free cash flow. So instead of using just trailing free cash flow, it also looks at expected free cash flow using the forward free cash flow calculation. And in calculating the free cash flow yield, instead of free cash flow, trailing free cash flow, it uses the expected free cash flow and divides that by enterprise value. You can read more about their methodology. And let's look at the kind of portfolio that is created by using this methodology. So, in this ETF, you will see that healthcare is gets the highest weight in terms of sector allocation, and after that, consumer discretionary. So, you will get a different kind of portfolio compared to COWZ. And if you look at the top holdings, CF Industries, Expedia, AbbVie, and Pulte Group are the top holdings currently. Now, the third ETF that I am highlighting is by Global X, and this launched just last month. The ticker symbol is FLOW, so it holds highest free cash flow yielding companies. This is the cheapest of the lot, but very new, as I mentioned, just launched last month, so has just 2.6 million in assets, cheapest with 25 basis points expense ratio. And again, let's go to the quote page on Zacks.com. Global X also has a lot of good research, educational material about free cash flow yields and its calculation. Now, looking at the methodology, it starts with this US 1000 index by Murray, and then it removes the financial services firms because in those cases free cash flow has been difficult to calculate according to Global X. After that, it looks applies the free cash flow yield screen and gets these companies, 100 companies with highest free cash flow with a sector cap of 25% and individual constituent cap of 2%. Let's see a look at the portfolio. So Marathon Petroleum, VMware, Booking Holdings, Chevron are the top holdings, and this ETF also has the highest exposure to energy, but much lower than cows. And then materials and healthcare are the largest sector. The last ETF that I'm highlighting that just launched last week, the newest, and this selects highest free cash flow yield companies from the S&P 500 index. Slightly more expensive, 60 basis points, and first trust, most of the first trust ETFs are slightly more expensive than their counterparts. And as I mentioned, just launched a few days back, so just 1 million in asset. So if you want to look at the Global X product or the first trust product, maybe wait for for some time till they gather some assets, or if you still want to buy them now, then make sure to use a limit order for these ETFs. But let's go back to uh, Zacks.com, and let's go to First Trust webpage for this particular ETF. So this starts with the S&P 500 index and then ranks them according to their free cash flow yield, and top 20% from each gig sector are selected in this particular ETF. So the portfolio that you get would be quite similar to the S&P 500 index in terms of sector allocations. So that is why information technology is the largest sector, and then healthcare, financials, etc. Top holdings currently: Corvo, Live Nation, NetApp, and Cisco Systems. Now, on the last slide, I have the comparative performance since the launch of VFLO, the Victory Shares ETF, because all these ETFs are very new, so I haven't included the Global X and the First Trust product. But if we consider since launch of this VFLO ETF in June, the COWZ ETF is up about almost 8%. The Victory Shares ETF is up a little more than 4%, and the S&P 500 index is up a little less than 1% during this period.
Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer. Also, make sure to subscribe to our YouTube video channel so that you do not miss anything. And I'll see you next week.